Let's keep looking at Bitcoin's NUPL indicator, which has dropped below 0.5. Is this actually good news or bad news? Ethereum whales have been accumulating recently. Under heavy regulatory pressure, can Ethereum still break its previous all-time high? And is there still a chance for the promised $10,000 by the end of the year? Solana used the US government shutdown to launch a staking version of its ETF. How long until the reckoning? Uniswap finally bowed to users. While they feast, users can at least sip the soup. It's Wednesday, November 2nd, and this is BTV Chinese channel. Where is B-Link? I'm Michael. Now, let's look at the key data headlines from the past 24 hours, brought to you by Nexo. Nexo is a licensed exchange in Australia, and its advantage lies in being especially user-friendly for Asian users after entering the Asian market. It eliminates many complicated KYC procedures, and users can directly purchase US stocks and other securities from capital markets. Moreover, assets held on Nexo can be lent out, used as collateral, and can also achieve continuous and efficient growth. So by scanning the QR code on the screen, you can get a perpetual discount on transaction fees. Additionally, after the event ends, you can participate in a lottery based on your registered UID. If you complete KYC and make a deposit with trading activity, your chances of winning will increase significantly. All right, let's look at today's data headlines. The US government has finally clocked in and gone back to work, and the surge we've been anticipating is now showing signs. The SEC and CFTC have both resumed work, so the bullish momentum in the crypto market is already building. Regulation is returning, policies are starting to change, and the scent of hot money in the market is starting to drift in. In the short term, there may be some ups and downs. The market was still down yesterday, right? But in the long term, people returning to work gives institutions a reason to get involved. What does that mean? Hot money is about to start flowing in again. Let's take a look at the e-commerce signals, which are also flashing green. According to data from Cryptic Count, Bitcoin's realized profit per unit, that is NUP, has dropped to 0.476, falling below 0.5. This is good news. It means that all the short-term players who needed to take profits have already left, the speculators are gone, and the long-term holders are still here. If we look at historical data, every time it drops below 0.5, for example. In January and July of 2024, as well as April 2025, Bitcoin rebounded by more than 30% to 40% each time after that. So now, looking at this 0.47 range, it has clearly held 3 times without being broken. This indicates that institutions are quietly increasing their positions, they're buying the dip, and smart money is starting to come back. Simply put, market sentiment is recovering, and capital is starting to show signs of flowing back in. Now, as long as Bitcoin stays above $100,000 and NUP flips above 0.5, a rebound could really happen at any time. It's not that we're blindly bullish, but we have to look at the current data to see if it actually supports our judgment that the bull market is still ongoing. This round of Bitcoin deleveraging has been very thorough, clearing out almost all the leverage across the network. The network-wide leverage ratio, ELR, has now dropped to 0.23. All open contracts, OI, have been cut by 12%. This wave of liquidations wiped them out in one go, so the market's leverage risk has decreased, the atmosphere is less tense, and capital is slowly starting to flow back in. According to past patterns, the range of 0.22 to 0.24, this range is usually the accumulation zone after a major drop, where the market often regains momentum and prepares for the next upward move. The technical indicators are also looking favorable. If we look at the short-term moving average, it's about to cross above the mid-term moving average. If this golden cross actually happens, it would be a classic signal of leverage coming back to life. Now, Bitcoin is holding steady around $100,000, which indicates that spot funds are stepping in while derivatives are receding. Overall, risk capital is flowing out, sentiment is recovering, and funds are returning to the market. If this momentum really picks up, the next big move is just around the corner. Now let's take a look at Ethereum. Ethereum has been quite interesting lately. Whales are aggressively accumulating while small investors are frantically cashing out. In just half a year, the number of coins in whale wallets has increased by 7.6 million Bitcoin, while small retail holders have actually reduced their holdings by 16%. So more and more ETF is being concentrated in the hands of those deep-pocketed whales. Whenever Ethereum drops to around the $3,000 mark, institutions immediately rush in to buy the dip. This is also why Ethereum can't seem to fall any further. So if we look at it, the ETH reserves on exchanges have been almost completely emptied, hitting their lowest level since 2016. At the same time, the transaction volume of stablecoins on the blockchain is also soaring, $2.28 trillion. So now, Ethereum has become a global highway for capital flows, and on December 3rd, Ethereum will launch the Fosaka upgrade, which is like adding a turbocharger to this highway, making it faster and more cost-effective. Overall, we can see that Ethereum is shifting from a sell-off phase to an accumulation phase, with sentiment, capital, and technology all resonating together. In other words, the whales are accumulating coins, while retail investors are waiting and watching for Ethereum's next big wave. Now, everyone is just waiting for that gust of wind to set things in motion. Alright, please like this video and turn on the notification bell. I'll help you sort through the most profitable Web3 news from the past 24 hours. This month marks our 6th anniversary celebration. If you join as a gold member this month, in addition to receiving a 50 USDT airdrop, you'll also get a channel t-shirt and other merchandise sent directly to you. Now let's look at the news. During the more than 40 days of the US government shutdown, let me tell you, not everyone was just waiting around. Solana took the opportunity to buy the dip. So what dip did they buy? Solana took the opportunity to launch a spot ETF with staking functionality. Some people joked that this was like a player scoring a bicycle kick goal while the referee was off the field drinking water. But how was this rule set? In September, the SEC relaxed the listing rules, right? Then in October, the government shut down. However, within these rules, there's a clause called automatic effectiveness. So after writing at your own risk in the document, the contract can legally be listed after 20 days. That's why Solana named this product BitSmart. This move was basically a textbook example of a perfectly timed sneak attack. Taking advantage of your distraction, I make my move first.
BitSmart's surprise move triggered a chain reaction. Grayscale Investments immediately announced it would convert its private trust fund to avoid being left out under the new rules. Traditional giants like VanEck, Fidelity, and Invesco also rushed to submit amended documents, seeking to quickly launch their products during this regulatory window. Even more astonishing, some institutions even started submitting ADF applications linked to non-mainstream assets like Ripple's XRP. The market entered a chaotic phase of competition, where whoever gets approval first gets the biggest share.
You think about it, and I think about this in Bink and a bunch of our portfolios. I have to make sure you can do redemptions and creations. I have to make sure your beta is consistent. So I do think you'll see more in an ETF. Listen, I think the ETF wrapper is in many ways the future because of the way people build models and think about it.
Hype has surged again, with spot ETF net inflows reaching $6.78 million in a day, maintaining positive growth for 10 days straight. Total net assets are now $598 million, and cumulative net inflows have surpassed $342 million. Solana's market cap is about $91.3 billion, with daily trading volume at $5.7 billion, still ranking as one of the year's strongest crypto assets.
As for Solana's recent moves, well, you can't really call it manipulation. They're just doing what they're supposed to do within the bounds of policy. By the way, this is something I just received as a gift from the official Solana team. It's called the Seeker. They've changed the name. It's no longer called Saga. Now it's the Seeker phone. So based on the staking rules in its built-in wallet, the annualized yield for staking Solana should be around 6.5%. Let's just round it to 6%. Currently, the total value of all Solana ETF custodial wallets combined is less than $1 billion. If it were $1 billion, the annual staking yield would be $60 million. So, this isn't about exploiting a loophole. It's about recognizing the allure of money. If, in the future, the amount of Solana being staked increases, then for institutions, a 6% annual yield for doing nothing at all is really quite tempting. Its platform token is called Uni, and this coin is considered a leading token among decentralized exchanges. Of course, its leading position is already on shaky ground. But in the past, we used to say that this token actually had little to do with retail investors or its ecosystem. Now suddenly, this token has surged 50% in a single day. Why? Because the official team changed the rules. They've started charging fees and burning tokens. As you know, most of the money Uni made before was given to the big players who provided liquidity. Now it's different. On every transaction, the official team takes a small cut and uses that money to burn tokens. So, as liquidity decreases and supply shrinks, the price will go up, and this is where retail investors come into play.
This proposal from Uniswap isn't just a minor tweak to the economic model. It's a structural reform. The fee mechanism will be rolled out in phases, starting with pilot programs on the mainnet's V2 pools and some V3 pools, and then expanding to Layer 2 networks and cross-chain liquidity pools to achieve broader protocol revenue sharing. At the same time, Uni's surge has attracted a large number of whales to enter the market. High-leverage long positions are concentrated, making short-term liquidity extremely active. However, on-chain data shows that some institutional addresses are transferring large amounts of Uni to exchanges, indicating that the market may face short-term selling pressure. This means that the current price increase is supported by fundamentals, but also carries the risk of short-term speculation.
To put it simply, this round of Uni reforms has actually been discussed for a long time, but it hasn't been implemented yet. Why is that? Even without these reforms, Uni has always been the industry leader, right? But now its position is being threatened. Ester and Hyperliquid have both taken a lot of its spotlight. So, with market competition, you see, it prevents the situation where a dominant player bullies its users. With these reforms, UNI is basically saying, I'll burn some tokens so retail investors in the secondary market can also benefit from the token's price increase. They get most of the share, but at least others get something. So market competition is still necessary. If you see a market where one player dominates, you should instinctively support the second-place contender, because only when the second or even the third and fourth grow strong enough to compete will the top player not bully customers or set the rules to exploit you. Here, there are both overnight riches and carefully crafted scams. This is a dark forest of chaotic development. Yet here too, the spark of hope leading to the light is being nurtured. The ultimate destination of faith is freedom. The endpoint of consensus is equality. BitcoinTV will guide you through the fog, help you see the future, and together we'll gradually become wealthier. Wall Street is scrambling for stablecoins like rabid dogs. Coinbase's $2 billion acquisition fell through. How will this change the market? Why has DeFi, with its regional decentralization, become a scene that discourages newcomers while CX are feasting? If you count, President Trump has about 3 years left in office. Since he took office, the Stablecoin Act and a series of other regulations have all loosened restrictions on the crypto world, making the entire environment for crypto assets very friendly. Especially with stablecoins, you can see that many established remittance companies, such as MoneyGram, Western Union, and even the most arrogant SWIFT system, have started considering how to use blockchain technology to reduce friction costs. So right now on Wall Street, there's a tense wave of capital mergers and acquisitions happening that most people can't see. Recently, there was news that Coinbase had been in talks for 6 months about a $2 billion acquisition, but now it has fallen through. Who were they planning to acquire? The largest stablecoin payment company in Europe.
According to Fortune magazine, Coinbase announced the termination of its acquisition of the UK stablecoin startup BVNK. Both parties stated that the deal was cancelled voluntarily, but did not disclose specific reasons. Notably, this transaction, valued at around $2 billion, was still considered a sure thing just 2 weeks ago.
Growth in stablecoins, growth in Coinbase One, so lots of bright spots within our earnings despite navigating a very choppy market driven by macro trends this quarter.
At the beginning of October, Coinbase and payment giant MasterCard were once in competition to acquire BVNK. In the end, Coinbase secured the acquisition rights through an exclusivity agreement. The collapse of this deal marks the company's second major M&A change this year. In August, Coinbase had just acquired a crypto derivatives exchange for $2.9 billion. Industry analysts believe that the termination of the deal may be related to regulatory scrutiny, valuation tiers, and macro policy uncertainties.
All right, so what is everyone really seeing behind this news? Wall Street is taking the route of capital mergers and acquisitions. And what is the ultimate goal of M&A? It's monopoly. They want to take advantage of this period when the US government is open to bring as much of the crypto landscape as possible, every piece of the puzzle, under their own companies. For example, Binance wants to control everything from public chains to application exchanges, decentralized exchanges, and data websites. They want to take it all. This entire ecosystem layout is within my field of vision. I can advance or retreat as needed, and I can manipulate things as I wish. I am both the referee and the player. This way of pursuing profit is perfectly normal for every company or capital entity, because the responsibility of any business is to make money. Of course, monopoly isn't necessarily a negative term. It all depends on how you look at it. Let me go a bit off topic. Do you all still remember FTX and Sam Bankman-Fried back in the day? It was called the central bank of the crypto world, right? Now, if you look back at all those companies SBF acquired, which one of them backed down, starting from Solana? Right, so I think CZ really knows what he's doing. FTX was just one bull market away. Of course, SBF was honestly still too young. If he hadn't liquidated so quickly, if FTX could have held on a bit longer, if he could have made it to this bull run, every card in his hand would have been a trump card. At that point, it might have truly shaken Binance's position as the industry leader, so eliminating it while it was still within a controllable range was the move. From the perspective of capital competition, there's nothing wrong with that, but who's right and who's wrong? That's just how the industry is. Success or failure determines the hero. Our channel is aimed directly at end users. Honestly, our content is quite basic. We're spreading information to Web 2 users. Fortunately, many Web 3 heavyweights also watch our show to get information. This year, Crypto Yield released a 2025 retail investor report. I really think this report is worth paying attention to, and I want to analyze it for everyone in our next live stream. After reading this report, the entire DeFi community was stunned. Why? It turns out the report says that over 20 million retail investors have gone to CEXs to earn interest. That is, they're earning interest on centralized exchanges. Right now, there are only a little over 500,000 users actually using DeFi as it was ideally intended. But what's the reality? Everyone just wants to sleep soundly at night. After all, a lot of regular retail investors don't understand code, don't know how to use wallets. What are they afraid of? They're worried they won't be able to withdraw their money. They're unsure if the protocol is stable, or if it might get hacked. And what's even more telling is that 60% of people have held their coins for less than a year. And these people, when they see an annualized return below 6%, just skip it entirely, don't even bother to click. So honestly, it's not that people don't understand risk, they're just too good at doing the math. Everyone's focused on short-term returns, so this generation of retail investors is harder to please than anyone.
The report points out that what retail investors care about most isn't the yield, but whether they can actually withdraw their money. Nearly half of those who participate in yield products, users worry about platforms running off with their money or getting hacked. Security outweighs everything else. In terms of preferences, flexible redemption is the top priority. Security endorsement comes second, and high returns only rank third. That's why 47.2% of retail investors choose to earn yields on CX. Jargon is a pain point. Terms like staking and yield farming sound intimidating and turn people away. Simple phrases like crypto interest and passive income are more appealing because they're clear. Even with new innovations in DeFi, beginners are still afraid of losing their seed phrases or paying high gas fees.
Many retail investors and newcomers who enter the Web3 space may not admit it openly, but deep down, they're definitely hoping to make quick profits, ideally to recover their principal within a month and double their money in 3 months. So let me ask everyone, if you've already been through a bull and bear cycle in this space, from the ICO craze to the NFT craze, to the runes and inscriptions craze, to the meme coin craze, and now the X404 craze, has any of these trends really given you the chance to turn things around, to upgrade your game and become a big player? Or are you still grinding away every day, just barely getting by? Are there any sectors that have helped you steadily hold on to your profits? If so, you can list them out. So in the Web3 world, sometimes slow is actually fast. On the contrary, if you chase after extreme, quick profits, there are 1,000 ways here for you to get wrecked. It's like the moment you step out, you fall for a trap. Every time, it's something different. To put it plainly, DeFi is still the trend of the future. You don't need any third-party institutions to prove or guarantee anything for you. You can freely use on-chain finance, and that's progress. But you need to know your own capabilities. If you're not that hardcore DeFi degen, someone who can read contracts every day and keep an eye on all kinds of protocols, then the wealth of this week is actually still quite a distance away for you. On-chain staking and restaking, in essence, this is a form of leveraged trading. Only those who truly understand risk management can play this game. For ordinary retail investors, it's best to just hold your spot assets or keep your mining machines. This way, you can dollar cost average every day and steadily earn returns. All right, quickly.
Vice Chairman Wu Jihan confirmed that the company's new mining site in Ohio, USA, experienced a sudden fire today. Out of 26 buildings, 2 collapsed due to the fire. Fortunately, no one was injured. The senior management team has already arrived at the scene to investigate the cause and plan for reconstruction. Meanwhile, Ethereum's on-duty operators have also started to withdraw. Since July, there's been a 10% drop, directly returning to last spring's levels. This is the first time it's been this quiet since POS went live. It seems the returns really aren't motivating anyone. Pump.Fund continues to spend money to support the price. According to Facepump Fund data, they spent 9,215 SOL, about $1.54 million, yesterday to buy back 339 million pump tokens. Since the buyback started on July 15th, they've already spent $170 million, and the circulating supply has dropped by nearly 11%. This level of effort is truly a real money show of faith. Traders on Polar Market have almost all placed their bets. 96% are betting that the U.S. government will be back to work this week, and only 4% think the shutdown will drag on. It seems even the market believes this government shutdown drama will end soon. Finally, it's coming to an end. Birin Live is officially shutting down and transitioning. On December 31st, it will go offline. And starting from 7:59 a.m. on January 1st next year, you won't be able to log in to the website or app. Don't worry, the live stream isn't gone. It's just moving to Binance Square, where we'll keep chatting about crypto.
Recently I heard something from Li Tao that really resonated with me. He said, "A rotten fruit will fall to the ground sooner or later on its own." So to extend that idea, when it comes to relationships that are meant to end, you don't need to decisively cut them off. They'll end on their own. You don't have to push them away. What's the hardest discipline in life? I think it's self-restraint. Sometimes even when you see through things, you don't call them out. When you're hurt, you don't dwell on the reasons and torment yourself. To me, that's a kind of open-minded attitude toward life. All you need to do is keep accumulating your own virtue and cultivating your heart, and let time deliver justice. You have to understand, this world always follows its cycles and will always find its balance. Fate has its answers. Every slander, mockery, and look of contempt will, in time, be gradually washed away. Everyone, remember this. Not every battle is worth winning. Sometimes, turning away is the dignified choice. That's not giving in. That's maturity. That's not cowardice. That's wisdom. Only by refusing to get entangled with rotten people can you truly deserve real freedom. If a dog bites you, would you bite the dog back? If you understand, give us a like. That's all for today's program. Here, we have what we call member benefits, and we hope you'll join as a member to support us in making this channel even more professional. This year marks our 6th anniversary, and we hope to lead everyone together into the next chapter. Gradually become wealthier within it. Command key.